Pelosi has a new playbook for 2026. What insights can retail investors find? MarketBeat's Neal Johnson is here to break down her recent moves for the new year. Jeffrey, there's a lot to talk about here today. You have a list of 4 stocks, but really, it's actually 8 stocks that we're going to be covering today that Pelosi has either invested in or sold from, and what it all means for investors and kind of how you can follow her playbook. Before we get into the specific names, I want to talk about kind of the rumors that have been going around about Pelosi making these moves at the end of last year.
There was some noise on the internet that maybe she was bailing out of big tech and that, big tech, the Magnificent Seven were collapsing. And I think that if you just looked at her trades in general and you saw that she was dumping some of the Mag 7 and stuff, if you didn't dig to see what her specific strategy was, it did kind of look like she was moving money out of big tech and putting it someplace to wait to see what's going to happen.
Yeah, we're going to get into big tech first here, but I do want to tease down the list a little bit of some of the stocks that we're going to cover that are in Pelosi's playbook for the new year. These are some names that you haven't missed out on. There's still really good buying opportunities on some interesting companies. So stick with us, especially the last stock on this list. It's really interesting, and it's a name we haven't talked about in a while. And it's interesting that Pelosi's investing in it. So we'll get to that one in a minute. First, let's get to the boring one, but the big ones. Let's talk about the Mag 7. She's made quite a few moves, and you've got 4 Mag 7 stocks to cover before we get on to the rest of the list.
Yeah, so for the Magnificent Seven, basically what she did was, we had a great year in 2025, and the expectation is that 2026 is still going to be good. But let's say buy a stock at $10 and it appreciates to $20. There, you want to be able to lock that in, and so that's pretty much what she did across the board. She sold most of the profit out of her trade and then turned around and used that for taxes and then to re-leverage with what are called leaps. They're basically long in the money call options. And so down the list, she went to Apple first and she dumped about 45,000 shares of Apple. She donated 28,200 of them to charity. That way she could get her tax write-off. And then she turned around and she bought deep in the money call options for that. Of course, with Apple, it's the iPhone super cycle that's coming up and the new Siri integration with Google. And so then the very next one, of course, is Google that she did. And the same thing happened with Google. She donated something like 7,700 shares for tax write-off purposes. And then she turned around and she took the profit from that and bought leap options as well for Google. Same thing with Google. She's looking at the future of AI. And then, of course, the integration with Siri is expected to bring Google billions of dollars in revenue over the next several quarters, as the front end of Siri will be handled by Apple's chip, but the back end of Siri, all of those cloud transactions will be sent to Google Gemini. And then the answers will be passed back to Siri to be processed out. So still also in the AI realm, NVIDIA, the same thing. She took the Kingmaker and she sold 20,000 shares of it. She took the profit from that and basically bought call options, leap options in the money call options. And with that, of course, it's the Rubin chip, that's coming out. So she's betting on the Rubin chip being a big thing through 2027. And then finally with Amazon, she's betting on the resurgence of Amazon's AWS services. And the same thing there, she dumped 20,000 shares, she bought call options and took the profit from that and used that to buy call options. In all of these situations, she's using the same playbook. She's liquidating the options that she already has. She's taking the profit from those options. She's using that profit to pay her tax bill and then to re-expose herself in a new leveraged position, basically just as deep, if not a little bit deeper than she already was in these stocks. So when you look at just those 4 plays alone, you can see that it's not a matter of her leaving the tech sector. She's actually getting deeper leveraged into the tech sector, and it's allowing her to use less money to gain more exposure.
So interesting. There's a lot to break down there. You covered so many things in a short amount of time. Great work with that. Let's talk about, I think that the biggest one that retail investors want to know from all of those moves she made, you explained it really well about probably what the playbook is and the intention is behind that. But what insight does that give retail investors for their own investments into big tech in 2026? Is there any insights that you gain from that maybe a retail investor could follow along with that Pelosi playbook?
The insight is that the big tech, the Mag 7, they're not dead. They're not dying anytime soon. They're not going anywhere anytime soon. I think that what she did was she took a lot of the risk off of the trade. So now she's got the profit locked in and she's able to, take care of the tax issues with that profit through her donations to charity, and then she's re-leveraging. The call options provide her more exposure to the stock for less cash money out of her pocket. So she's able to keep some of that profit in her pocket for a rainy day, but maintain the exposure through the call options. And because they're leap options, they're deep in the money. So these stocks would have to really falter before she took much of a hit in her portfolio.
Yeah, she certainly knows what she's doing in the stock market, and that's why so many retail investors like to follow her. I do think it's important to note this week, especially, that two of the Mag 7 names that aren't in the list of her recent moves were Microsoft and Meta, both of those stocks moving more than 10% in both directions this week. Microsoft down over 11% at one point in reaction to its earnings. Meta up over 10% in reaction to those earnings, but both of those earnings reports were actually pretty good. So it is a little bit interesting that Pelosi didn't make any moves in those two big names, right?
Yeah, I think that it is interesting that she hasn't made any moves in those 2 names. She has held Microsoft for a while, so it's interesting to see that she chose to continue to hold it and not make any transactions. Both of them did really well in their earnings report, and that's the expectation for the 4 Mag 7s that she's played pre-earnings.
All right, very interesting. If you are curious about some other stocks that could be Mag 7 worthy names in the future, make sure to check out this free special report on marketbeat.com. We have a QR code you can scan, or I'll drop the link in the comments if you want to read a little more. These are 7 stocks that could be bigger than Google, Nvidia, or Tesla. Again, I've got that link in the comments if you want to read on your own. All right, Jeffrey, let's move on to the second stock on this list of following Pelosi's playbook.
So the next one's gonna be AllianceBernstein, and they are, they're a financial services company. They're enormous. She bought like 25,000 shares of that company. That's a great place to park your money if you're waiting on things to happen. So, she's a tech investor. There's so much volatility that having a place to park your money where you don't really have to worry about it is a good situation. And AllianceBernstein is great for that.
Yeah, this is one of those tried and true companies that continues to just grow slow and consistently, has a really good dividend. I'm also curious what that might say. We see these big tech investments. She's clearly not pulling out of the AI movement. We've got a couple of other names coming up that we'll talk about some other areas where she is kind of risk on in the market. But what does it say to other retail investors out there when Pelosi is parking a lot of shares in a really safe play right now? Could that say anything about her outlook on the economy this year, or anything else that retail investors can gain from that kind of a big purchase in this company?
I think honestly, it's a really smart play. It's a wait and see kind of play. There are a lot of plays that I put in articles where I say that this is a play that you're going to hold on to where you're going to get paid to wait. And that I think essentially is what she's doing. You think about with Alliance Bernstein, they have a 8.04% yield, and that's $87,500 cash in your pocket every year for every $1 million that you put in. And at the share count that she purchased, she's somewhere between 1 million and $5 million. So the dividends that come off of this play actually kind of act as like a hedge or almost insurance because she can lose up to 8% of the rest of her portfolio and still come out, even.
Yeah, I think the safer move makes sense for Pelosi to have a large portion of her assets in that safer investment. But she's not all about safety. She's got a couple of names that are still on our list here today that are a little more interesting and have some more potential to have some moves in the future. So, what's that next name on the list, Jeffrey?
Her strategy typically is to find companies that she's interested in, let's just say in the AI sector this time around, and she buys long expiration call options. Okay. So then at the end of the year, if the company has gone up, it's gone down, and it's really, it's not worth its salt, she can just get rid of those call options and rid herself of the company in general. These next two situations, she did something that was very telling. Instead of taking the call options, selling them, and taking the money, she exercised the call options and chose to keep the stock. She sees enough value in these companies that she's willing to go from the risk averse options market to physically holding the actual stock. And the first one that she did that with is Vistra, the electric company, and their stock symbol is VST. She transferred over to them because Vistra is the power generation mix that you need for AI. They have an excellent mix of services that are pretty custom tailored for AI when you combine their legacy generation capabilities and their nuclear generation capability.
Yeah, this is a really interesting company that's had a few ups and downs this year, not anything too crazy. But I think what's interesting is kind of the analyst outlook for this one. There seems to be a lot of analysts that are very bullish on future growth for this company. And if Pelosi's investing, you got to believe that's probably where her mind's at too.
Yeah, there is a lot of bullishness going on with this. We just had this huge cold snap, and Vistra was one of the companies that provided backup power during that because it got actually so cold that natural gas was freezing in the pipe. So we had to go pretty much to nuclear in those regions, and that gave Vistra this backing of being able to provide power 24/7, which is what the AI industry wants. And then you take that and you combine that with the recent 2.6 gigawatt long-term power purchase agreement that they took with Meta, and you can see why it's kind of a no-brainer. They've got the deal with Meta, and they've already proven out that come rain, sleet, snow, whatever it is, they're still going to be able to make power. And those two things are required. You have to be able to do that in order to make AI power because AI systems can't go down.
Yeah, we know the power piece of the AI story has been huge. And we know Pelosi knows that too. She's a lawmaker who's in all of those meetings, probably learning a lot about the AI build out and infrastructure build out across the country. And so interesting that she chooses this energy play. What does that tell retail investors maybe about what to think about investing in energy in 2026?
As AI moves from learning to actually doing, the amount of power that it absorbs, it doubles, triples, quadruples sometimes. We're already maxing out the power grid, and we're saying that within the next year, all of these online models are going to come on for service. And when they do come on for service, that's just going to tax the power grid even more. It's going to double tax, triple tax the power grid. And so the bullish look for it in the future is the AI story. And when you talk about the bullish side of things, you have to look right now they're trading at 164 and Scotia Bank the other day rated them at $300. So that's like, almost 100% upside from where they're at right now.
Yeah, there's definitely a lot of bullish outlook on this company and the energy sector as a whole. I think it's also very interesting that Pelosi herself is investing in this kind of smaller name. It's definitely not a name that's popped up on the show before. So I think that is why I want to add this one to Bridget's buys, my paper trading watch list. It was a hard decision between this one and the last stock you have for us today on the Pelosi playbook, because the last company is also very interesting. But I'm going to be like Pelosi, bullish on energy in 2026. And I think that this is a good play with a lot of potential upside. It'll be interesting to see how it continues to move, following it along on my watch list. If you haven't checked out Bridget's buys yet, scan the QR code. We got a link in the description and in the comments if you want to follow how all of the stocks that we talk about on this channel are doing. But let's get to that last name. Again, really interesting name. And it's one that we have talked about on the show before, but probably not for almost a year now.
Yeah, so we were talking just a second ago about energy and its requirements for AI, and we discussed the whole thing about going from learning to doing. And so the next one on our list is a perfect example of AI doing something that is super important, and that is going to be Tempest AI. And what they do is they use AI to create immunotherapy routes for patients that have solid tumor cancers. And basically what that means is they take each cancer's RNA and DNA profile, they feed it into an AI. The AI looks at hundreds of different immunotherapy options and grades them on what's going to be best for that particular patient. So it's using AI to help figure out how to solve the patient treatment algorithm with cancer, and that has been able to do that in a much faster, much better, and increasingly better way than doctors have been able to do it in the past. And they have another AI about to come online on top of it that just got FDA approved.
Okay, that's interesting to know that there's another one coming online. And this is really an up and coming company, even though it's been around for a little while. It's all of these developments, I think, that have investors and investors like Pelosi excited about its future. But this stock, it's kind of been like the last one we talked about, kind of up and down and hasn't had that explosive kind of growth that some other AI companies have seen in the last couple of years. What are your thoughts on that future growth potential? Are they still in that early stage for Tempest AI?
Tempest AI is still in their early stage. They have gone now from like the science experiment phase to the actual doing something phase. And their current program, which is the Tempest IPS system, which is the system that I talked about earlier, that works with oncology to find treatments. That and their new Page Predict program, which is coming on, which is actually a suite for like a digital pathology suite. The revenues come up like 30% year over year. And so as they continue to grow and introduce new products, whether they're just simple products or they're AI integrated products, you can expect that revenue to continue to grow. And of course, as the company grows, the volatility should start easing off a little bit. As they become a more stable company and they get more stable revenue, of course, their earnings will start to stabilize as well.
Yeah, there's a lot happening with this company. It's a little bit of a pause to see where analysts are looking at this company right now. It looks like it's rated as a hold from six investors, a buy from six others. So, kind of a mixed bag. Those price targets anywhere from $70 to $105. So, a little bit all over the place on what analysts are expecting for the future of this company. Do you think that there is still a strong growth story here, especially looking a little bit more long term? Is that what Pelosi was maybe looking at?
I think that there is a really great long-term growth story here, and not just for Tempest, but AI and healthcare in general, but specifically for Tempest, as they've gone from like their IPO stage and they've gone from like their science experiment stage to now actually providing products and coming out with newer, more innovative products. The analysts, I think, will start to kind of settle down. If you look like back in November, from like November until now, there was just a massive re-rating in the 80 to $100 range. And, we're in the $60 range right now. So that leaves a nice upside. And then this is an AI stock. And so just like with a lot of the other tech stocks, you have that perpetual chasing of analysts, where analysts will come in and let's say the stock is at $50. They'll say, okay, well, we'll raise our price target to 65. They're not going to raise it to 200, because it's still so, skeptical as to whether or not there's going to be success there. So they're constantly chasing it, and that's what you look for. You look to make sure that when it hits 50, the analysts come out and say 65, and when it hits 65, the analysts come out and say 75. And that slow, constant chasing up is is how you're gonna get there with this stock, because they're never gonna come out and say, "Hey, the stock's trading at $50, but we're gonna say it's worth 300," because there's just so much risk right there. Even though they have active products and they're making money and they're 30% year over year increase, it's still super risky. It's still AI, it's still biotech, and those are like the two riskiest sectors. So, you take biotech and AI and smash them together, and now you have this even riskier section.
Yeah, it's still a risk, but it's a risk that Pelosi's willing to take. And we know a lot of her investments generally do pretty good. And that is why we always follow Pelosi's moves on this channel. We also follow what other members of Congress are doing too. Make sure to watch another video we recently did on what members of Congress are up to in their investments.